All right. Okay. So welcome everyone to our Marketview quarter for 2020-22. Like every quarter, so this quarter we're going to talk about what has happened in real estate market in Cambodia and in Phnom Penh in particular. And our topic for this quarter is, where are we in the market cycle? My name is Strata Hu, and I'm an analyst of Research and Consultancy Department of CBRE Cambodia. And today we're having two speakers, Mr. James Hart, our Managing Director of CBRE Cambodia, and Mr. Ben Nesbitt, our Associate Director of CBRE Cambodia. Okay, so before we start, I just would like to inform you that you can send your Q&A by clicking on the Q&A button highlighted in yellow below throughout the presentation, and then we will answer the question at the end of the presentation.
Thank you, Srelek. I think there was a poll that we were supposed to be launching, and we'll give that to you in just a second. So let me start off by going through the most recent news that we've been seeing over the quarter. And to start off with some of the good news first, there's been quite a lot happening this quarter. We saw bicycle sales increasing quite a lot. And we've also seen a lot going on in the environment, such as rats, demining lots of those UXOs, as well as a ban on the burning of the straw in the agricultural areas. More notably, on the world stage, we saw Share bring Kavan the elephant, the Pakistani elephant, to Cambodia, which made media headlines across the world. And we also saw the investment in or the gaming laws change slightly, and that was to increase some of those taxes in the gaming industry, looking to prop up that as a more viable sector and a more transparent sector to invest in. Some of the other news that we've been seeing is Nagacorp, the gaming giant based in Phnom Penh, largely got approved to start their new project in Siem Reap. As well as a lot of other real estate related things, which aren't on the screen right now, but delays in the capital gains tax implementation, as well as extensions on both the tourism related taxes and stamp duty exemptions on the affordable housing. Further completions of developments, such as the Hyatt Regency opening its doors just at the end of the year, and lots going on in regional trade. So the Chinese-Cambodia Free Trade Agreement was signed and has begun. The RCEP, the Regional Trade Agreement, is well underway. Talks with Korea, or the Republic of Korea, are moving on quite well. And the loss of EBA is somewhat being replaced by this GSP from the UK. To what extent it will mitigate the losses from the withdrawal of the EBA is yet to be seen. More interestingly, we've seen that US elections have caused quite a big stir on the global stage. Immediately, it looks fairly negative for Cambodia, with more in sanctions, but we'll have to see how this situation develops over time. Interestingly enough, both of those leaders tend to like wearing sunglasses quite a lot, so who knows, maybe they'll get on a little bit better than we initially expect. Looking at the dashboard that we've put together for Cambodia, COVID cases have remained largely under control in Cambodia. Just looking at the region, you can see well behind Vietnam and Thailand is currently experiencing its second wave quite formidably. GDP growth to rebound, and the latest forecast by the National Bank of Cambodia, they're expected the GDP growth rate for 2020 to be negative 1.9% and bouncing back in 2021 to 3.5%, a more moderate forecast than the other forecasters on screen right now. Please bear in mind that the ADB's forecast, I think, was back in June, and the World Bank's being the most recent there. On the real estate side of things, downward trends have continued, and we'll go into more detail about that as we go into each sector later on in this presentation. Looking at some of the finance in the country, we've seen NPLs come down slightly, especially in mortgages during Q3. This data is from the Credit Bureau of Cambodia, and we did see those mortgage values and applications bounce back in Q3. It seems that Q2 of each year tends to be quite low, with 2020 being exceptionally low on their index. However, looking at all lending on real estate, it's been increasing quite substantially over time. In the World Bank's latest report, they noted the reduction in construction imports of steel and concrete by quite an amount, and you can see that in the reductions, or at least the plateau in lending on construction, the pink line on the right there. What is interesting is to see the increase in lending on mortgages, so the blue line on the right and the blue lines on the left, and that could be quite good news for some of these landed property developers, seeing that financing is readily available for those landed property projects. However, the World Bank did note their cause for concern over the levels of financing related to the real estate sector. Looking at the stock market there, we've put up the index change year on year. These are spot prices as at the opening day of the year and the closing day. So not as telling as they could possibly be, but I think overall the trend for the Cambodian Stock Exchange has been slightly negative, with only one listing in June and no listings towards the end of the year. Vietnam saw positive growth, and that's along with their GDP, which I think is 2.9% for the year positive, which is pretty good. And as always, like we've been saying throughout the year, if you bought gold, you've had a pretty good time this year. More interesting developments have been the government bond. There's been some progress on that with the authorities, and we're hoping that a government bond could be issued sometime in 2021, but it's yet to be seen whether that will happen or not. And the Cambodian Central Bank blockchain payment system came online officially, which is a really interesting move for the country, as well as some of its more technologically advancing aspects, such as 5G. I'll end on construction investment volumes before I hand over to James. And what we've seen really this year, and these are January to November year on year, is that the number of projects has remained largely the same, but the value of those projects has been decreasing. Now, these numbers are fairly lumpy, and big infrastructure projects such as airports and expressways really impact these numbers significantly. But I think it's quite clear to see a cool down in some of those expensive projects. That being said, most or almost all of the infrastructure projects have been continuing, and even some new ones on the horizon, such as the Siem Reap road expansions, the Mondulkiri Airport, but all the major infrastructure projects, Phnom Penh International Airport, Siem Reap International Airport, Phnom Penh Sihanoukville Expressway, to name just a few, have been carrying on uninterrupted. I'm going to hand over now to James, who's going to run through the land sector as well as the office and retail sectors.
Thank you, Ben. I will be talking about land, office, and retail. As a starting point, we'll kick off with the land market. We haven't seen a great deal of change over the course of the entirety of 2020, and that continued in quarter four. The only area where we have seen a decline in average prices was a very, very moderate decline in Cham Kar Mon. There are isolated incidents where we are seeing sales at slightly below what we would consider market level, and those have principally been in secondary locations. But in the majority, the prices are holding up well in the face of a reduced transaction volume environment. I think when we look at the general outlook for the land market into 2021, there is some cause to consider that we might see some reductions over the course of at least the next 6 to 9 months in some areas, and that is partially due to the considerable volume of loan restructuring that we saw from the banks in the middle part of 2020. Some of those customers will be facing some financial difficulty, we anticipate, and that could mean that we do see some land plots come to the market with a need to sell more rapidly. But the appetite from investors is certainly still there to pick up plots, and CBRE over the last quarter have been seeing improved instances of interest from overseas and domestic purchasers who have access to finance and cash. So for the major outlook, things are broadly stable for the land market. We don't expect significant increases, but nor have we seen significant decreases at this time. The economic fundamentals behind many of the projects do hold up these land prices in most areas. There are some parts of the market where we could possibly see some average price increases in the secondary districts, particularly, I think, in the southern districts, where we are seeing the infrastructure investment being put in by OCIC to increase access to the southern area around where the new airport will be or is being built at the current time. And equally, some of the central districts, with the reductions that we've seen, and we'll talk about a little bit later in terms of rent, we may see some pressure on land prices. But equally, the availability of plots in central districts remains quite tight, so we're unlikely to see a significant reduction in pricing as a result. Over the course of the last decade, the average increase each year has remained pretty consistent and robust. And you can see here that we've been looking at above GDP, and in some cases, almost twice GDP performance from the land market in terms of growth rate. In particular, if you had bought in Tul Kork or Sensok, or even Choi Chang Vai, you will be very, very happy. And in many ways, these are down to the increasing volume of projects that we've seen in those districts over the course of the last decade, as well as the infrastructure investment that's associated with those. And we can expect that to happen now a little bit further to the south, where we see Aeon 3 and some larger landed property projects being developed out. Just to illustrate that point a little more clearly, with the changes that we have seen over the last 10 years, this is Phnom Penh 2010 to 2020, and you can see the densification that we have witnessed over the decade in the satellite picture. We use this fairly frequently, but I think it's a good reminder for all of us. And you can still see the areas of sand which have been prepared for development. So there is a considerable amount more densification planned by developers for the city, and particularly when we look on the fringes of Phnom Penh, at Choi Chang Va, at Chiba Ampov, at Diamond Island, and to the south and the northwest. So we'll move on quickly and take a look now at the office market. In the fourth quarter, we didn't see any new launches of projects, but we actually saw three new completions, one grade B and two grade C. They provided just over 41,000 square meters of new space into the market. And in next year, we are expecting 205,000 square meters of space to be developed, out and finished. We will go into the breakdown of where that sits in terms of strata title and centrally owned, and the dynamics behind that, how we expect those to play out over the course of the next 12 months. When we look at mobility for Cambodia, it's been a bit spiky, and these are due to the public holidays that we saw in August and September, as well as the incidents of community transmission that we saw in November, having an impact on people's pattern of movement. But overall, Google Mobility Tracker puts Cambodia's Q4 average at around 19% below the pre-COVID baseline, whereas the rest of ASEAN was around 17.5% behind. And you can see at the end of December into early January, there was a considerable decline. We believe this is because there were some incidents in Thailand of community transmission and the number of cases increasing there. So that light blue line just dipping off. But overall, the ASEAN region has done better in terms of keeping people in the office than the general global average. And Cambodia and our neighboring countries' success at having controlled, at least to a certain extent, the immediate community transmission of COVID-19 in away from large volumes of cases has helped us to keep this volume up in terms of people going to the office. Cambodia has a strong reaction to any issues of community transmission, and we can see this in the mobility tracker. So the numbers bear out what we're seeing on the ground with regards to people's movement and fears of the COVID-19 pandemic. A little bit more information here on occupancy and supply. So over the course of the year, we saw just over 100,000 square meters of space delivered, and in the final quarter it was 41,000, so it made up a significant proportion. In the final quarter, occupancy fell just 1.76%, and compared to what we have been seeing over the course of the year, that meant that net take-up in the final quarter, given the outlook of that significant volume of supply, was actually quite strong. We did see more activity in the office market. There were more leasing transactions completed, and a number of owner-occupiers took space themselves in a large proportion inside some of those completed projects, which helped that number considerably. The saving grace for the centrally owned office market in 2021 is that for this sector, there isn't significant volumes of supply expected. In fact, we are only looking at about 12,000 square meters of new space next year. There are a few small grade C buildings that we're looking at completing, and also the grade A completion at Tapana Tower. So the majority of the 205,000 square meters to be delivered is in the strata title space, and we'll talk about the dynamics there and how they're going to interact with the centrally owned stock in a couple of slides' time. So these were the completions that we witnessed over the last quarter of 2020. C5 at Olympia City and One Park were conversions of former residential buildings. They both changed at different times in their development life. So under construction, they were transitioned to office space. C5 Olympia City a little bit earlier than the space at One Park. And we have seen a new format of office space taking shape at Equation, which is based on Diamond Island. And that's providing a very affordable option for occupiers in a low-rise format that is proving to be quite popular with the local market at the current time. So rental remained under pressure, and that was particularly true now for the grade C market in the CBD. We saw nearly 8% drop in quoting rents over the final quarter of 2020, whereas for much of the rest of the year, rents in grade C CBD located offices were on the up. Grade B, both in the CBD and outside, continued to trend down, and we saw nearly 5% decreases in both of those. Grade C in non-CBD locations, because of its cheaper pricing, remained more robust, and the trends from occupiers were certainly towards locating affordable options for their business, as they all focus and continue to focus on maintaining cash flow as much as they can over the longer term. We think that longer term, these trends will probably persist, not so much in terms of rental reductions. A lot has been done already by the landlords. We expect that to plateau out into 2021, but we will go into that in more detail in future presentations, which we'll tell you about shortly. So the strata title office market, we did see a significant increase in supply over the course of this year. Over 50,000 square meters of new space was added into the sector. But we did see nearly 67,000 square meters of space, which was meant to be completed this year, delayed into 2021. The COVID pandemic did cause some supply chain disruption, but also landlords are not, the developers are not too confident about completing projects during the current market condition and have slowed their construction somewhat. So we didn't see any new completions in the fourth quarter, but we are expecting a significant increase in supply over the course of 2021 as projects such as the Gateway, Morgan Tower and GIA Tower all set to complete, all of which are of a significant scale. In review, this is the full year change for the office market in Phnom Penh. So we didn't see any launches of new centrally owned supply, but we did see 2 further strata title projects launch, which in a market that's trending in the direction that the office market in Phnom Penh has been trending over the last 12 months, is relatively surprising that we just continue to see launches, but sales have been possible in those to foreign and domestic buyers, depending on targeting and pricing. But the centrally owned stock now, there is not a significant proportion of centrally owned supply that's forecast into 2023, 2024. The majority of it remains now in the strata title sector. There is one larger project in the centrally owned space, and then many more owner-occupied projects which are of a more moderate scale. So launches are pretty quiet in the office space, as we would expect. We did see continued delay of completions, only 11,500 square meters in the centrally owned stock, but 67,000 square meters delayed in strata title, as we said. But we did see a significant number of completions over the course of the year, which obviously combined with the issues we saw for businesses globally as well as in Cambodia. This contributed to the reduction in the rents that we've seen. So over the course of 2020, rents in the grade B market moderated by between 13.5% and 16%. Whereas grade C offices in the central districts did actually improve, and this indicates the trend of businesses looking for and continuing to look for moderately priced space, also in a good location. And that was a similar trend in grade C. -3% performance over the course of the year is relatively strong. The grade C market was already well occupied at that time, at the start of the year. So it has fared much better than Grade B, where we saw a significant volume of supply added into the market over the course of the 12 months. And where those landlords have had to adjust their rental rates in order to continue to appeal and build that occupancy. So the average vacancy now stands at almost 19%, so around 80% occupancy rate. This was down from about 90% at the end of 2019. So Grade B rents have come down sharply. There is a lot of new stock around, a lot of new options, and people have been looking. We've seen activity increase, but occupancy rates are continuing to be an issue for Grade B landlords in particular. And developers have switched their attention now to strata title because of the pricing model that is offered by that ownership format. They are not necessarily willing to take the risk of building a centrally owned product and instead looking to pre-fund as much of their project as they can by selling part of or as much of the space as they are able to during the life of the construction. In the retail sector, we did see a brighter fourth quarter. There were 12 new entrants added into the market over the 3 months to December. We didn't see any new completions of space in the market, and we did see 26,000 square meters of stock delayed into next year, which isn't too surprising given some of the issues that we witnessed with retail being hit hardest in terms of mobility due to the issues we saw with coronavirus at the end of the year. Overall though, Cambodia faring pretty well in its retail compared to the ASEAN average. ASEAN obviously impacted significantly by markets such as Thailand, which have very big retail sector and have been affected by the lack of tourists feeding their retail markets. And obviously ASEAN quite close to the global average and tracking it quite well. So around 23-24% below pre-COVID baseline, whereas Cambodia at minus 18%. Whilst it's difficult and the retailers are finding it painful, the performance is generally better, but we do see some quite sharp drops. And in particular, after the November 28th incident, we did see a very strong decline in footfall to retail, which, because of the location of the November 28th incident, is not too surprising, with that having been at Aeon 1 in the center of Phnom Penh. Developers have completed a fair amount of retail space over the course of the year. We've been looking at somewhere in the order of 45,000 square meters completed. However, that pales in comparison to what we expect to see in 2021, although there may still be a good chance for a proportion of that to be delayed further due to the pressures of the current market. However, much of it does need to get open because it's nearing the end of completion and the developer cannot continue to hold it for too long. Occupancy actually fell quite strongly over the final quarter. It was down 5.5%, and that's for 2020 was the poorest performance in terms of occupancy rate. I think it was a culmination of a few things, but principally the pandemic just taking its toll generally, and the retailers replanning their and repositioning their physical stores for next year. This was also borne out by the rental numbers that we saw coming out of the retail sector in Q4. So retail podiums and community malls did see a decline, a continued decline. Retail podiums at almost -6%, with community malls at -3.3%. Shopping malls and high streets were stable, they'd already seen some downward adjustment in the previous quarter. So from an average prime rent of around $30 in mid 2019, we are now down to below $25 on average for the retail stock, prime retail stock in Phnom Penh, which means the ground floor space in prime development sites, prime projects, sorry. So what's new in the retail sector? Well, as we said, we saw 12 new brands. That's 6 in the food and beverage space and 6 in fashion and accessories. So it's quite well contained in the 2 areas of the market where we have been seeing more activity over a longer period of time. Particularly, we saw some high-end fashion enter the market, which was somewhat surprising perhaps, but it's located at the Prime Shopping Mall in Phnom Penh at Vasanat Capital Tower, as well as at Aeon, and well-known locations for these formats of brands that are looking to get a footfall in Phnom Penh. When we look at lack of travel as well, there is some potential for these higher end brands. Typically, wealthy Cambodian would be heading overseas to go shopping in the exciting markets in Thailand or Singapore. They can't do that now. So having these brands on their doorstep where they can pick up their latest Burberry coat for the cold weather that we're getting in Phnom Penh at the moment, is probably quite handy. We also saw a continuation of the tea shops opening in Phnom Penh, as well as some fast food options. But now the previous quarter was the best quarter for new entrants, as well as the worst quarter for expansions of existing brands. So a bit of a paradox there. We did see developers trying to pull in new people in order to fill up space, and attract them in, try something different, whereas the existing brands were looking at consolidating, and in some cases we saw continued branch closures, which pulled the occupancy rate down somewhat across the market. So over the course of the year, we saw 1 new launch of retail. I think it's probably a relief for the retail developers, given the predominance of launches that we saw over the last 4 years from all manner of formats, from community malls to shopping malls and across the city. So we saw 1 Strata title launch, which actually was a reformatting of a formerly closed project. It was New City Walk at Choi Chang Va. We saw 26,000 square meters of space delayed into next year, so increasing the 2021 expected supply pipeline further. And we saw 5 completions. They were all community malls. They added 40,000 square meters of space, so about 17% of supply increase, which when you compare that to occupancy decrease of less than 1%, the developers could have been considered to have done quite well. However, I'm sure that they would disagree with me given the significant decrease in rental that they've had to take on, particularly for retail podiums, where the formatting and some fears about occupancy in residential and office space above new retail podiums has seen a promotion of some reductions there in quoting rents. And we have seen some moderation in high street rents, but they've held up very well. And this is borne out by some of the flagship operations of fast food and restaurant chains that have come into the city, particularly if we're looking at the likes of BKK1, where we have seen good interest taking up prime positions there and holding those rents up despite increased vacancy on high street formats. So I will pass back to Ben now. Ben will take you through condominiums and service departments.
Thank you, James. Yeah, so the condominium sectors perhaps maybe the most interesting sector over the quarter, boasting 3 new launches, was the only sector that we're going through today which had any launches over the quarter, and it saw 2 completions. So really the increase in supply over the quarter, 4%, wasn't too much, and the total supply, almost 26,000 units, we'll get into a little bit later. But to look at those new launches, here they are. You've got City Light Condominium, Greenleaf Residence, and Real Hope. I think the last one there, Real Hope, is maybe what everyone's hoping for 2021. Not sure whether I would put it on a building, but all those 3 units adding just under 500 units to the supply pipeline. And the 2 completions that we saw over the quarter were Beoli Mansions and Royal Park Condo, adding much more, just under 1,000 units to the pipeline. And this is really the trend that we're seeing, is the new launches are much smaller formats. We're not seeing those big Chinese developers launching 500 unit plus projects. They're much smaller ones done predominantly by local developers. So what has that done to supply? Well, most of that was in the affordable and mid-range, and really over the year, that's where we saw most of the supply complete. So the percentage change year on year in supply added has come down a little bit, but I wouldn't get your hopes too high, because the forecast for 2021 is an addition of just under 11,000 more units to the market. This is quite a large change in supply. I think the high-end sectors have been largely untouched for a while, but we are expecting some completions next year. But that mid-range sector really taking the lion's share of the supply both this year and forecast for next year. So what has that done to sales prices? I think it's quite important to remember that predominantly it's those new launches which are affecting sales prices, and mid-range has really taken the hardest hit here, dropping just under 6% on the quarter. And we'll see what that looks like for the year in just a moment. Affordable moderated a little bit better at negative 1.5% for the quarter, and high-end coming down slightly. It's actually the first time in quite a while, I think, before 2017, that those high-end sales prices have dropped below $3,000 a square meter. Similar story with the rents. They have continued to moderate slightly, high-end coming down just a touch there, and the mid-range coming down negative 6.7%. These averages on screen are for the whole market across all unit types, where if we look into it a little bit more, you can see that those rents are moderating more in the mid-range sector, and on those larger units, so smaller units, tending to fare slightly better than those 3 bedrooms and above. So what did it look like for the year? Well, 17 launches and 3 expansions. That's a massive amount of new supply to enter the market over 2020. I think this really talks about the developers' confidence in the condominium market, or perhaps in some cases, maybe a little bit of arrogance, but we'll see what happens with that. 10,000 units added to the pipeline on top of what was already in the pipeline. We did see 8 completions adding just under 4,000 units, a supply increase of 18%. I think next year that supply increase is just over 40% year on year. And we've got the 13,000 units expected to complete in 2021. Those sales prices year on year have come down significantly, again with the mid-range really taking the hits. I think in the condominium sector, what we've seen is the focus on the local market and more on those affordable projects. So we'll see if those prices come down enough to attract the local buyers slightly more than they have done before. It's still very difficult to attract those foreign investors into the market, as they're still quite limited due to travel restrictions and the ongoing pandemic to get over here and look at those properties. Similar stories with the service department. We had 1 completion this quarter, which was the only completion this year, adding 4% growth to the supply pipeline. We're now just at under 3,000 units total for the supply of service departments in Phnom Penh. And this was the completion, Sun City Basak. It was the second project to complete from Sun City, their first one being very popular serviced apartment located in BKK1, and their second one here completing in Chamkamon, adding just over 100 units to the supply. The supply of serviced apartments is quite wavy, as you can see in the graph. I think really it's still quite a new market. There aren't too many projects. So when those completions do happen, you get quite a large increase in the total supply, and then it peters off again next year. 2021 doesn't have too many completions again from our forecast, but it will tick up slightly to just over 10% increase. Looking at those rents, I think this is really the big story here, that those rents have come down significantly. So here are the half changes. So this is compared to the end of Q2 2020. You can see decreases across grade A and grade B. Similarly, these changes are across all unit types within that grade. And if you look into it a little bit more detailed, you can see those 3-bedroom and penthouse units moderating much more than those 2 bedrooms and 1 bedrooms. Really, these changes in rents are predominantly due to the reduction in expatriates in the country and in the city, as maybe brought on by some more of those COVID restrictions, such as school closures, hampering expatriates from returning to the country. And I think really that's why you see those larger unit sizes, especially the 3-bedroom, 4 bedrooms and penthouses moderating even more because there just isn't the demand for that. Interestingly enough, the grade B moderates much further than the grade A, even on a unit by unit scale. And I think this really talks about those that, however, remaining in the city with those prices coming down and without their budgets being hampered, they're able to upgrade their apartments to a grade A serviced apartment for no extra cost. So those yearly changes here, like I said, no launches, no expansions with only 1 completion, and those rents over the course of the year have moderated significantly to almost 19% for the grade A's, for the grade B's 18.2%. I think really looking into the future, we need to see expatriates returning, but the lack of developments and the lack of launches is pretty good. So at least we can try and hold out for that absorption to pick up. I'm going to quickly talk about the market cycle here. So the title of this presentation is Where Are We in the Market? So this is a conventional real estate model for real estate cycles. Now, before we get into this any further, this is a representation of a market. Not all markets follow this. This tends to work more for mature markets, and you don't always see complete cycles. But with our research team, we sat down and tried to place out where we think each sector of the market is along this curve. And this is what we came up with. So really our ideas here are that, well, we'll start from left to right. So the industrial sector is sort of in an expansion market. We are seeing more industrial schemes come to the market, but they tend to not be the right stuff. I think buyers are looking for built to suit options, and developers are sort of holding off until they get those agreements in before they go and build that stuff. But the secondary market has quite a lot of supply, but it's not purpose built. High street retail has done pretty well over the year, especially. Lots of those brands that James was talking about earlier are interested in getting those prominent locations in those retail hubs, getting front and center, and getting all those Food Panda motorbikes outside for their Facebook page. Really, what we're seeing there is quite robust rents staying there and supply not being increased too much. Sometimes in that high street retail format, it's quite difficult to increase supply because they tend to be located in quite small areas. Landed property also has been increasing in supply quite significantly, and we've sort of placed this on the cusp of oversupply. I think here we've spoken about it many times that the demand seems to be there. These projects tend to not start development until they reach a sufficient level of pre-sales, but we do have some concern about the future of landed property. It seems that everyone and their auntie is trying to do a landed property development, variable scales, variable qualities, but tend to be those big names still stand out. They still do well and they still achieve good sales rates. Service departments, I just spoke about briefly there. So we think that this is really heading into a contraction. I think what some of the good points that it has for it is really that relatively low supply. So just under 3,000 units is not too much of a problem. We haven't seen any further launches and we have one completion expected for 2021. This market obviously is purely based on the demand from external or expatriates working in the country. It's very difficult to get locals into this sort of format. They tend to prefer the landed properties or buying condominiums. So we'll need to see what happens with those travel restrictions or travel bubbles and the vaccine before we start seeing a recovery within that sector. Strata title office and centrally owned office, James spoke about these in great details. I think really our concerns here are the large increase in supply. While centrally owned office doesn't have too much coming over the next couple of years, it's yet to see those rents moderate further and start recovering into a much more robust market. But strata title for sure, I think it's difficult for us because there aren't many completions within this sector of the market to see what is going to happen when it hits the market. I think some of my concerns personally is to see what's going to happen with that centrally owned occupancy rates, whether some of those tenants are going to move out to the strata title or not is yet to be seen. I think it's unlikely, especially in the higher grades of centrally owned office, but we'll see what happens. Condominiums, again, similar to strata title, lots of supply. And I think the lack of foreign investors, especially this year, has really put some pressure on those developments. And for sure, we would be very concerned about the levels of supply. We did see new launches in the sector, which is, slightly worrying, but I guess it talks about the developers' confidence in it being able to achieve those sales. Organized retail centers have been having a hard time. So in this category, we're counting in those retail podiums, especially community malls, shopping centers. And I think here really the amount of supply that we've got hitting the market next year is quite considerable. So those rents have come down quite a lot. And really to talk about getting into recovery, we're going to see a lot more brand representation, a lot more activity within those markets. And I think we'll talk about this more in our next presentation, which Srelek will talk to you about now.
Thank you, Ben and James. So I just want to let you guys know that we're having our biggest event coming soon for the year, the Fearless Forecast 2021. The topic's gonna be recession or resurgence, and it's gonna be on February 17th at Hyatt Regency, that just opened from 8 to 10. So please RSVP because the number is limited. And if you want to register, you can just you can see on the chat box, there's a link that you can click in and register. We will only accept one registry for a person. So please, if you want to share it with your friends, please make sure that they register themselves. So now we're going to share you a poll that would love all the participants to participate, and we would like to know what you think about the real estate market in Q4 and in 2020 in general. So the first question . Okay, so the first question is, have you seen an improvement or deterioration in the business environment during Q4? We have
So we'll
we'll just wait for more of you to vote on this, and just remind you that you can ask individual questions in the Q&A box at the bottom of the screen. So we've got a few questions coming in now. So once you've voted, do head there and you can ask us any questions. Ben and I will do our best to answer as many of them as we can, as best as we can. It's a good opportunity to grill us on any specifics that you've, any specific queries that you've got from the content earlier. Okay, so far about a quarter of you have voted, and I think about a quarter of you saying that you saw a slight improvement in the business environment during the fourth quarter, which is good news, about 50% of you. So that's good to know, and I think bears out what we were seeing also in the activity levels that we were seeing from occupiers in the market. Where do you think we are in the market cycle? Well, yeah, I think you largely bear out what we were saying. We probably should have asked you before we told you what our suggestion is, but roughly half of you also thinking that we're in oversupply, with the rest broadly split between expansion, contraction, and recovery. I imagine that's because you're focused on different sectors of the market, and that's quite understandable. Everyone is in a different phase when we look at different sectors that we're dealing with. Which sector do we think has the most potential in 2021? Well, we can tell we're in Cambodia. It's land. Yeah, land is still quite strong, and I'm especially seeing interest from Khmer buyers in locations where infrastructure has been announced, and that's still quite robust. We're also seeing some increased interest again in the Sihanoukville market after some moderation on the pricing there. But most people for the land market, as far as we can see, are waiting to see some distressed assets coming to the market. And finally, which investment do you think will struggle most over the course of 2021? Broadly split between retail and condominium. Interesting. I think condominium has done quite a lot to adjust itself over the course of 2020. We saw a lot of repricing. We saw a lot of developers retargeting their audience and bringing in more robust local sales teams to drive interest. That has potentially swamped some local condo buyers. There aren't that many in the domestic market that we can see. The pool is growing quickly, but it's still relatively limited, especially in the mid-range and upper ends in the center of the city, where prices generally higher, at least 2,500 a square meter. But on the edge of the city, where they can, I think the developers have adjusted somewhat, and we are seeing that having some effect on their sales performance in the final quarter of the year. Retail, yeah, it does still face a bit of a challenge, and it's all about creating a point of differentiation in the retail sector for the developers to see results starting to pick up again. And we've seen this happening in some centers where they've started to look at new ways of operating or new operators. So we will now move on to Q&A. just for everyone's reassurance, this PowerPoint presentation will be delivered to all of you in the coming 24 hours, and it will be available on our website thereafter. We'll send you all a link, and we'll now head on to answer your questions. So the first question comes from, how is landed residential performing? How are new launches, and have prices softened? Have sales volume softened? Well, I think there was some trepidation in the landed residential market in Q4, but for the right project, it has remained relatively robust. There is local demand remaining quite strong for landed property. We have seen some new launches. They're mostly smaller scale, and as Ben mentioned earlier, with regards to landed residential, the development format of this being horizontal rather than vertical development means that the phasing of it is a bit easier for the developer. They don't have to build everything all at once. They can phase it in a more granular way than we see with high-rise development. Prices are broadly robust. What we are seeing is more of a trend to increasing flexibility on payment terms, an increasing reliance on mortgage lending, and generally people looking for more incentive out of the developer. The secondary market in the landed residential sector does appear to have softened. We don't see a significant volume of stock available, but where it is, often there are good deals to be done in that sector. So I'll hand over to Ben on the next question.
Thank you, James. A couple of questions here. I think just make it clear again, the Fearless Forecast, the link is in the chat. Please only register if you are in Phnom Penh and you can make it. I would love to see you there. I think I haven't seen most of you for quite a while now because of all these lockdowns, and I have also posted the link in the chat to get these reports. They won't be uploaded for another 24 hours, so you're all very privileged to see them right now. Great. Yeah, we have some questions about major challenges facing the real estate sector in 2021. I think really that wraps into our format for our next event, but we could touch on that quite quickly. I think, you know, each sector, as I went through earlier, has its own challenges, and they're quite different, and they'll be coming out of these cycles, or where they are in the cycle, at different speeds and different rates. And I think really, you know, I would echo some of the World Bank's report and their concerns over the level of financing involved in some of these things, and you know, where the money is coming from. I don't think that, you know, they're not too concerned about that, and there are really strong and positive GDP growth forecasts for Cambodia in 2021. But if you look at it on a breakdown, maybe not so positive in the construction sector. I think, you know, some of the positive things that we are going to see is the completion of some of those major infrastructure projects. We are seeing a lot of interest in Cambodia on the coastal development in Kampot and Sihanoukville especially. And really that infrastructure should prop up a lot of the real estate market going forward. Some of the biggest challenges perhaps will be these US relationships, travel restrictions, vaccination, and the rest of these external factors. I think really the issues that it faced with real estate in particular have mainly been addressed throughout this year. We've seen corrections across every single sector to varying degrees, and there may be some more way to go or more growth option next year. But I think really the biggest risks in real estate are going to be those external factors as we go into 2021. Do you want to take a question, James?
Yep. So one question on retail here. Do we have any comment on Bluebell coming in to manage the mall at the peak? Yeah, great news to see a new operator coming in. It's always welcome to have new experience, new contacts to diversify the retail sector. I think that's an important step. Bluebell have a very experienced track record across Asia Pacific, and obviously an array of connections. So definitely an interesting move, and well positioned for the type of target audience that Bluebell might be trying to attract in terms of the Shangri-La Hotel, or the hotel at the Peak, as well as the huge expansion and potential of the Naga World complex, which is close by, obviously, as soon as travel restrictions ease up a bit. So I think all round it's a strong move, and it's good to see another international operator coming in and showing confidence in the Phnom Penh retail market. So overall, yeah, very positive. One quick one here: will we be broadcasting the Fearless Forecast over Zoom? We won't be. It's an in-person event, but if demand is strong enough, we may look at some alternative webinars after the Fearless Forecast in a slightly different format. Fearless Forecast is quite a long event with an awful lot of detail. It's about 2 hours, so we don't want to keep you all on Zoom for too long. But hope that those of you in Phnom Penh and feeling comfortable to join in-person events, that we can see you there. Anyone else who has interest, we'll obviously provide the deck to you. The deck will be available from us, and we're always happy to have face-to-face conversations on specific items if there's anything of interest that you would like us to comment on.
And James, I've been getting asked this week, and there's a question here about it. I think really overall to put some perspective on 2020, how do you think the real estate market reacted overall, considering what's happening globally and within the region, and the GDP numbers, especially for Cambodia? What are your overall sort of closing comments on the real estate market?
For real estate globally in 2020, it's been a difficult 12 months. I think it's raised a lot of questions about how real estate functions, and about how it's operated and managed, and how we use it going forward, and not least because of some of the longer term trends that's accelerated, particularly around working from home, around technology, around the environment, around health and wellness. So real estate, like every other sector, has got to adjust and amend. It's not only just that COVID-19 has accelerated the market cycle in Phnom Penh, it's also brought up some of these points. And Cambodia has done amazingly well at being able to contain the virus and not see significant amounts of community transmission, and that's a big blessing for the market. So whilst it has been difficult, I think there could be a lot worse places to be if you're a real estate developer or landlord at the moment. And so in that vein, Cambodia has done quite well from a real estate market perspective, but clearly those risks remain into 2021, and we all need to be mindful of that. In terms of landlords, they've shown that they're pretty pragmatic. Many have responded to the challenge that's been faced, and have adjusted and sought extra advice from various professionals across the market about how to adjust, or they've done it internally. And I think we're starting to see the results of that come out over the final quarter, when activity picked up, despite there being an increased risk of community transmission in Phnom Penh. So overall, yeah, difficult 12 months. We can't say that it's gone away, and we'll talk about that a lot more in Fearless Forecast about where we head next. Fearless Forecast is forward-looking, not backward-looking, like this presentation has been. So we'll try and set the scene for how Cambodia moves ahead from this point in the market, and this point in time, and this point of a change for so much of the business and real estate environment that we act in at CBRE here.
Yeah, thanks, James. And I think, you know, I can only echo what you said. I think over our advisory and research basis, as well as our brokerage lines, we've seen this enhanced level of due diligence, and all the market players are really looking at components of the deals and developments and projects a lot further. So I think that, you know, whilst this has been a bad thing for the market, maybe it has been the catalyst for a slight maturation in the processes that we're going through. Not to say a maturation of the market by any means, but we're starting to head in the right direction. I think some of the questions that we haven't had to answer as much as the rest of the world on work from home and those sorts of things, you know, have brought to light some more important issues that we'll talk about in the FIDS forecast, like environment and other things along that vein. I'd like to thank all of you for joining today. It's been great to hear from all of you, to get the results on your polls and to hear all your questions. Thank you very much for that. I'll mention again that you can get this slide deck and the written report on the website, and I think they'll be emailed out to you in the next 24 hours as well. And if you are interested in joining the FIDS forecast event, please make sure to register using the link, and we'll be excited to talk to you and to see you there. Thank you from me. Thank you to James and Sreelek for moderating, and we'll speak to you very soon.
Thank you, Ben. Thank you, everyone. And we look forward to speaking with you further in 2021. Do raise any questions with us that you have separately. We're always happy to help. I'm sure most of you know us, but we are also available on our website. Our contact details are there if you don't have our phone number to hand. Thank you. Have a good evening.